inviting me here. It's quite a privilege to speak with all of you. Maybe I'll start with just an intro of how I got started. So in 2013, I started investing in Bitcoin. I made many mistakes and lost probably the equivalent of hundreds of thousands of dollars in the subsequent year or two. But in Chinese, they say, "And then in 2016, beginning of 2016, when I saw Ethereum rise, I saw this blockchain 2.0, and that there could be significant, serious applications rather than just as a currency. And that's when I started to invest more time and energy. And most recently, I joined a blockchain startup, VC funded by Tim Draper, called SWFT, as the CFO. So when we're looking at a cryptocurrency, two important factors to start with are, one, its usefulness, and two, the supply and demand dynamics. So in the case of Bitcoin, one of the reasons it's been able to appreciate so much so fast is because of the limited supply. And in fact, according to the protocol, the maximum possible number of Bitcoins is around 21 million. That'll be reached around the year 2140, I believe. And of those 21 million, over 85% are already mined, are already in circulation. So the supply is relatively fixed. I put a basic chart up here. You can see that the supply is relatively fixed, so any incremental increase in demand results in a significant increase in price. So another very key component to look at when we're analyzing the investment potential behind Bitcoin is understanding if it is a new asset class. The reason it's important to understand whether it's a new asset class is because if you can get in at an earlier point in time when the total market cap, and for those who don't know, market cap is defined as the outstanding shares times the current price, is low, then the ability to multiply that investment is much easier. So the key is to predict a mainstream asset class before it becomes mainstream. And if you just think about, if the market cap is 1 billion, it's easier to double your money. It's easier to double your money going to 2 billion than it is to go from 100 billion to 200 billion. And now, obviously, Bitcoin's market cap is over 200 billion. And the whole U.S. economy, as a point of comparison, has a GDP of around 13 trillion. So there is a relative upper limit in terms of the total amount it's likely to go up. But I've given you a point of an asset class as a point of return. Art actually, very interestingly, started to become an asset class in the early 2000s. And more of a mainstream asset class, and it produced relatively high returns. Okay, not as high as Bitcoin, but relatively high returns as people entered the market. But then, as it became saturated, those annualized returns reduced significantly down from 20% in subsequent years. So, how do we know if it is an asset class, or going forward, how can we determine whether future investments can be considered a separate asset class? I divided this into 4 different characteristics we can look at. One is its investability. Is this something that can be readily invested in? In the case of Bitcoin, obviously it is very investable. In the case of other cryptocurrencies, it's also very investable. The other is its correlation of returns with other asset classes. Is this an asset class that closely correlates with other asset classes? For example, is it very closely correlated with gold or with stocks? And in the case of cryptocurrencies, the answer is no. It is relatively independent of other investments. The third is looking at its political economic profile. It is very unique, as we just mentioned, in terms of the supply-demand dynamic, the different macroeconomic factors that do influence it. And the fourth is looking at its sort of risk-reward profile. The chart I put here is basically looking at it's just a reference. This is a little bit dated. It's going into 2016, but it's for illustrative purposes of looking at the returns relative to risk. And it's calculated by taking the market risk minus the risk-free rate divided by the standard deviation. You don't need to remember that. But what you can take note of this is that Bitcoin does have a unique profile as giving significantly higher returns despite higher volatility. I think the slides, I'm very sorry, apparently the slides have been somewhat cut off. But this is, I'll read it out to everybody, a tale of two curves, Bernanke's crypto J curve. So every technology brings a tendency for a conflict between hype and actual value created. And so at the beginning, we see a much faster increase in hype relative to the volume, the value created. And blockchain as a technology has massive potential to change significant portions of our economy, but we're very early in that cycle. And so, in my opinion, we're probably around here in terms of it has high expected value, which affects people's willingness to invest in the asset class. But the actual usefulness or value created from that technology has yet to be fully realized. So I expect, as we'll talk about a little bit later, we'll see continued increase in use cases. One very important thing to remember when you're investing is that it's as important to know when to exit as it is to know when to enter. Many people spend hours thinking about, okay, when is the exact point I should enter, and don't give a single thought to when should I exit. So I want to read one of my favorite quotes in investing, which is that pigs get fat, hogs get slaughtered. So it's good to be greedy, but not too greedy. And being greedy is why humans are motivated to do more. It's why we're motivated to work. It's why we're motivated to become better. But if you're too greedy, you get into a gambler's mentality of this all or nothing game, where you say, okay, I'm going to go all in and try to make it to double my money, and eventually you're going to lose. The important thing to realize when you look at an investment is that its risk-return profile dynamically changes over time. So when you initially look at the investment and when it's $100, and it overnight goes to $200, the risk-return profile of it changes. It is now more risky relative to the incremental future return possible. So it's important to realize that to not only analyze at the point of entry, but to realize that that risk-return profile changes dynamically over time. Another very critical component when all of you go to look at investing in cryptocurrencies is to not put too many assets into cryptocurrencies. This is a highly volatile instrument. For the few of you who invested in Bitcoin, you probably experienced from 19,000 to 10,000. But if you follow a portfolio perspective to investing, your downside will be limited, and you'll continue to enjoy the significant upside. So generally speaking, when you're looking at an overall investment portfolio, you want no more than around 20%, 15 to 20% in alternative asset classes. And alternative asset classes are non-stocks, they're non-bonds, and then within that 15 to 20%, cryptocurrencies would be a percent of that. So I've put this up here as for illustrative purposes. This could be 40% bonds, 40% stocks, 20% in alternative asset classes like cryptocurrencies, but not exclusive to cryptocurrencies, and other asset classes like art or real estate or derivatives. Okay, so that's a little bit of an overview about some of the underlying investment themes that should serve as guidelines for you to invest, to not only look at increasing your returns, but also to protect your view on the downside, to protect you and embrace and avoid pitfalls and significant risk. So I won't spend too much time on the basics. I think most of you said you own Bitcoins. So just as a brief overview, it is a decentralized digital currency, not backed by any single government or governmental intermediary. And Bitcoin first started in 2009. If you were lucky enough to invest then, even just $1,000, you'd be multi-millionaire now. But it started as a peer-to-peer electronic cash system. This is just a little bit of overview of where there's the most transactions, the most nodes in the Bitcoin network. You can see US and Europe are relatively concentrated. These are a few numbers that I think are important to understand Bitcoin. One is the 21 million total supply we discussed, which is the total maximum, and it'll reach that in 2140. And the number of Bitcoins at you given as an incentive to miners tends to happen around every 4 years, and every block is created approximately every 10 minutes. So one very interesting thing to look at when comparing Bitcoin versus other digital currencies is whether we can look at Bitcoin as a digital gold or as a digital store of value. And the reason this is an interesting point of comparison is that for other altcoins, you really need to look at the usefulness of them. Do they solve a real business problem? But in the case of Bitcoin, there's a massive demand for an alternative to gold and to fiat currencies like the US dollar. So I don't think it's coincidental at all that the white paper for Bitcoin came out in 2009 following the financial crisis, when there was a complete collapse in confidence in the financial intermediaries that govern our international global financial system. And so there is that intrinsic demand for something to replace gold as a store of value in our digital age. And gold and Bitcoin is a very shares some interesting similar characteristics to gold, such as looking at its store of value, its limited supply, but you can also analyze it on a few different frameworks here in terms of durability. We can see that Bitcoin is digital in nature, so we don't have to worry about whether it will perish. It is more divisible than gold, which in that sense would make it more convenient. And then it's fungible, and the word fungible just means I can take the same Bitcoin here and it's worth a Bitcoin in another place. And there's the limited quantity, which causes it to relatively increases its significance as a store of value. It does have less history than gold, but that is increasingly less important as time goes on. So it's just the question of there are many metals, only one gold, many cryptocurrencies, only one Bitcoin. That's a significant question, because a lot of people look at Bitcoin and they say, this is not the best protocol. And indeed, I think Bitcoin looks now like the Model T, and we have much better cars like Tesla, but it doesn't have to be the best protocol to have the largest market cap if it continues to be used and thought of as the best source of value. And gold is an interesting comparison because it's not really used for industrial purpose. It's limited use for industrial purposes. So people do make necklaces with it, but the industrial use is about 12% of its total usage, compared to, for example, steel, which is much more driven by the actual usage of it. And that's why a lot of steel manufacturers will look at China's 5-year plan to see infrastructure planning, because it is industrial based. Whereas gold doesn't have that, is not primarily driven by its industrial use and its usefulness as a metal. So in conclusion, Bitcoin doesn't have to be the most advanced cryptocurrency or protocol to be the most valuable. And indeed, if we look at what's happened to Bitcoin over time, we can see that it's actually not even very useful as a medium of exchange, which is what it was first intended for, as a peer-to-peer medium for transaction. So if you look at the BTC mempool, which is basically the outstanding transactions that have yet to be mined, or that have yet to be confirmed by miners, it's over 50,000. And that basically means that there's several hours to get those transactions confirmed. It's about on each block on the Bitcoin blockchain is about 1 megabyte, which means it can process around 3 to 4 transactions per second. Compared to Visa can do about 2,000 transactions per second. The credit card Visa. So it definitely doesn't have that scalability. And the cost per transaction, if you include the miner fee, has gone up significantly and continues to remain above $50. So it's not useful for small transactions. How many of you know about forks? Okay. I'm just gonna go in this relatively briefly then. So there was a disagreement within the Bitcoin community, and which led to a hard fork. One of the forks is Bitcoin Cash, and Bitcoin Cash is seen by some people as the being in the spirit of the original Bitcoin because it increased the block size to 8 megabytes. So Bitcoin Cash is viewed as an interesting investment for people who were originally interested in Bitcoin because it is a more scalable solution, and the core developers are interested in making sure it continues to be a scalable solution. So I'll skip this. Sorry, I'll skip this slide because I think it's probably aren't too. Are any of you interested in learning more about the difference between Bitcoin and Bitcoin Cash, or is that? Okay, I'll skip that. So I think overall the audience is probably more at a beginner stage and thinking about whether or not I should invest. So I included this slide as just to tell you different ways that you can purchase or acquire. One is just going to one of these larger exchanges, the largest in the US being Coinbase. Another is offline transactions. So you in Chinese it's chaowai. And then there's Bitcoin. There's now starting to be Bitcoin ATMs. And there's cloud mining. And then there's real mining, meaning you have to actually purchase your own hardware. How many of you would actually be interested in potentially mining? No. No. Okay. In that case, okay. There's only 2 of you, so I'm just going to go through this relatively. I'm going to go to this relatively quickly. You've probably heard about a lot of people making money through mining, and indeed, I started in 2013, 2014 with 2014 with cloud mining. But the issue that's happened is that although the price of Bitcoin has gone up significantly, the difficulty has gone up even faster. And so if you don't have access to cheap power to brute force guess the algorithms, then you really are priced out of the market. And so for the average investor, it actually doesn't make sense to do cloud mining or real mining unless you have sort of industrial grade access to cheap power. So that was the key point of this slide, to say that investing directly at this point in time actually makes more sense than trying to go out and mine for the average investor. So the Bitcoins are again significantly driven by the supply and demand dynamic and the belief that Bitcoin will be valuable in the future. there is an amount of usefulness that derives from the rapid transaction speeds, now slower, of course, and the lower fees, but it's not. The primary value is that supply and demand dynamic. So I'm going to touch briefly on Ethereum as well. Again, using that core framework of looking at supply and demand dynamics and usefulness, the supply of Ethereum is also relatively fixed, and it's not expected to expand significantly beyond the current supply. So the current, I think, is around 98 million, and it's not expected to go significantly beyond 100 million in the coming years. So its usefulness is I just want to break this blockchain down. So blockchain started primarily, blockchain 1.0 in my opinion, started just in terms of as a currency. And then Ethereum, which was founded in mid 2015, really put in place blockchain 2.0, which is basically smart contracts. And now blockchain 3.0 is starting to look at the decentralized applications across industries. So Ethereum was really the foundation for pushing forward with blockchain 2.0 and has become the standard for a lot of new ICOs. So one interesting thing to look at with cryptocurrencies versus traditional investing is that in traditional investing, you've probably heard the benefits of diversification. And indeed, at an asset class level, as we said, you should not put too much in cryptocurrencies in general. But for individual protocols, not putting all eggs in your basket, in one basket, might not be the best policy, because what will likely happen is a lot of people will focus on this sort of the best protocol. And that's partially from network effects and partially because it has a superior foundation on which to build on. So there's a significant possibility of a winner takes all for building that foundation, and therefore using the traditional method of don't put all your eggs in one basket or diversify across different cryptocurrencies does not necessarily apply in the cryptocurrency space. So what about ICOs? There's obviously a much higher risk, and the requirements to get on exchanges are significantly lower than getting vetted by a venture capital firm or obviously being listed. So in fact, a lot of ICOs, there hasn't even been any code written. They just have a white paper. So be very careful when investing in ICOs, and be sure to assess the return relative to the risk. And here are a few key aspects to look at when you're assessing a new blockchain program. One is the team. 2, looking at their white paper. 3, looking at any legal issues. Where will they run into any difficulties if they're investing in the U.S., registered and going in the U.S. with the SEC or FINRA. 4 is looking at from the smart contract. Is this something that's solving a real business problem? 5 is looking at the security, and 6 is looking at their marketing efforts. Have they made what they're trying to accomplish clear and well articulated? Does it make sense? These are all basic questions to ask. I'm going to leave these slides to be distributed. The next couple of slides, I think, can serve as a starting point for you to assess blockchain programs and ICOs. The first thing to look at is team composition. And although I personally am not a programmer, I always look at the team's GitHub profile. Have they been contributing to the blockchain, to distributed ledger technologies over periods of time? because what a lot of people are doing right now is just copying other people's white papers. So you have to be very careful if you're thinking about investing in somebody's ICOs to make sure that the team is legitimate, they do have the right experience, and then after I look at GitHub, I'll look at LinkedIn to see what is the relevant experience. So the critical question you should ask yourself when looking at these ICOs is this blockchain protocol really necessary? Is it really solving a business problem, or is it being used as a way to get cheap funding? Next, you need to look at what is the stage of the project. Have they written any code? Do they have a beta version that's available? Do they have any users already on the platform? Another one, if it does have VC backing, generally speaking, the project has gone through significant vetting and is at least has meet a certain standard for of quality. And then I understand that many of you are from a programming background, but if you aren't or don't understand all of the distributed ledger technologies, look for community feedback from trusted leaders and opinion leaders, and also ask knowledgeable people about the quality of the code. The next is to look at the token distribution. When will the tokens be distributed, and how? Also, in what percentage? What percent do the founding partners get versus what's distributed to investors? Now, one very key point I want to stress, as all of you are probably looking at the massive market caps and increasing prices of these cryptocurrencies, is that a lot of them are engineered or fraud. And it's important, and market cap can be very misleading, because what some of these cryptocurrencies founders have done is they've only allowed a certain percentage of the total outstanding shares to become invested. So let's say I have 1,000 shares in total, and I say that 995 of those 1,000 shares are given to the investors, and only are given to the original founding team, and only 5 of those 1,000 shares are actually available on the market for trading. Now, with the 5, because there's only 5 shares, it's very easy to manipulate the market. So I can use those 5 shares and bid it up to a very high price with limited capital, with limited money, because there's that limited quantity, and then the market cap is derived from the total number of shares outstanding times the current price. So it's critical to realize that there is a lot of market manipulation that is happening, and that's one of the reasons you can see such a high spike, because there is a certain amount of market manipulation that is going on for a lot of these cryptocurrencies. So a lot of you are probably at this point saying, okay, so what should I invest in? What are some of the key attributes I should look for? As I mentioned, in my opinion, we're still in blockchain 2.0. So we're still building out the infrastructure for future 2C use cases. And so a lot of the most promising blockchain companies at this moment in time are focusing on infrastructure, laying the foundation for future decentralized applications. And so a lot of people are using a picks and shovels approach to assessing investment opportunities. So for those of you who don't know, the picks and shovels approach is referring to Levi Strauss during the gold rush. And a lot of people came to California hoping to strike rich, but they came away with nothing. However, all of them bought a pair of jeans or a shovel from Levi Strauss. And so he made off very well, regardless of whether the person who purchased did well. So that's another interesting thing about Ethereum. Regardless of what you view Ethereum alone, if you look at Ethereum as being used for significant number of ICOs, that will naturally increase its demand because it is the foundation for all those ICOs. So if you look now, most of the new ICOs are using Ethereum as a foundation, and because they're using Ethereum as a foundation, the demand for Ethereum has gone up. So regardless of how those individual ICOs perform, underlying them is Ethereum, and that is as a core infrastructure has resulted in increased popularity and demand for currency. So the second is again looking at teams, making sure that they have the right experience and talent, and the third is looking at whether they are addressing a significant market. Is this something that will make, if they solve this problem, will there be a large payoff? You don't want to be in the case where it's a difficult problem, and even if they solve the problem, the solution that they're bringing only tackles a small market. At the very least, you want them to solve a problem that has the potential to pay off in a big way, because most of the ICOs will fail. And so you need those few ones that are successful to make up for the losses. The fourth is just making sure that they have the capital to withstand competitors and paying salaries. And the fifth is to make sure that they have a competitive advantage to make sure that they can stay dominant in the market. So I apologize for the formatting. It changed when I uploaded it. I just want to do a case study of what I would consider a potentially unsuccessful ICO to make all of you aware of the potential risks. Tezos was a very famous ICO, raised a significant amount of money, around $230 million US dollars, and they were considered to have a relatively strong team. They had an interesting innovation around the future-proof smart contract system, where they could avoid risk of hard forking and thus splitting the market in the future, like what we saw with Bitcoin and Bitcoin Cash. But and they raised a record amount of money. But 4 months, fast forward 4 months, and the tokens are still aren't available to investors. The network launch has been overdue. There's a significant amount of infighting amongst the team, resulting in a lot of the directors leaving. And there's a failure to disclose a lot of the risks involved. So what you'll see with a lot of ICOs is that they have this initial pop in the first few months, but that is not necessarily going to sustain over time. So it's especially risky for you as an individual investor to invest after 2 months when it's already gone up, and because the potential for it to come down later, as is the case with Tezos, is significant. So I will say I am the CFO of SWFT, so I'm very biased when I come to discussing this page. But if looking at our project, we do have strong technical talent, and what we're trying to do is leverage artificial intelligence and pairing algorithms to lower the costs when transacting between exchanges. And we will be distributing some free crypto coins to all of you towards the end. So just want to reiterate some of the larger investment risks. There's the regulatory risk. As many of you know, ICOs were shut down in China, and sort of on platform has been cracked down. A lot of the mainstream exchanges have also been shut down, and there is the potential for platform hacking. In 2015, many of you know about GOX. I personally have lost money from being hacked. The fourth is to realize mean reversion. I think this is a very important investment concept to be aware of, which is basically over time, an investment tends to revert to a long-term average. So if it goes up, it can come down. If it goes up fast, it can also come down fast. So making sure you're aware that if it has gone up, there's a high tendency or a high pull for it to revert back to a long-term average. So just be aware of that when you have a significant short-term pop. The risk that it will come down is higher. Another one is just extreme volatility. I think most of you have been looking at the market cap for a lot of cryptocurrencies and understand that risk. Another is that the use cases for these cryptocurrencies never are realized. So there's a lot of promises right now, but very little delivery. So finally, I just want to pose questions to you for food for thought. And so what is the future of Bitcoin's ICOs and distributed ledger technologies? Is Bitcoin just a speculative investment? Is it the digital age's gold? Is it the future of payments? Will ICOs replace VCs as a significant amount of as a better form of funding at the early stage? And will these distributed ledger technologies really fulfill the goal of having a decentralized future where significant intermediaries like banks are not fully necessary to complete our financial transactions? So these are all open-ended questions that I think will continue to be answered in 2018. And I think it's a very exciting year for blockchain technology and cryptocurrencies as we start to transition from blockchain 2.0 to blockchain 3.0. So we're giving away free Swift coin. So you can join the WeChat group, just sign the QR code, download an app called IM Token, and then you'll get a digital address within the IM token, and we'll send you free Swift coin. They do have value. I think 100 will be worth like $3 or $4, or $2 or $3. So you will have all of you will be getting free money. Just to give you an idea of what we're doing here, these Swift coin are used as the transaction fees for arbitraging the difference between cryptocurrency exchanges. So for those of you who are interested in trading on exchanges, you'll probably notice that there's a significant difference between the prices on different exchanges. And we're using AI and pairing algorithms to arbitrage out that difference and make sure you as the investor get the best possible execution price. For those of you who have listened to this and say, okay, investing on this is not for me, you can still get free coins, which you can play around with and get a sense for how cryptocurrencies work. So I'll end there and open it up for questions. Yeah.
So I think you just mentioned Ethereum as the platform for the ecosystem. So I think 2 months ago I invested several Ethereum and it did very well than the Bitcoin. So right now I'm looking at the EOS. If you ever heard of that, they are trying to replace the Ethereum, and they are going to release on this June. So I'm currently holding a lot of Litecoin actually. So I'm currently thinking about moving the Litecoin to the EOS. So what do you think about that?
What's your name?
Don't.
Okay, let me answer them one at a time. So I'll answer your first question.
Yeah.
So you're right. EOS is positioning themselves as being a replacement for Ethereum, and I think if Ethereum does not improve between now and the end of the year, they'll be at serious risk for being at least partially replaced. Because the system, the Ethereum is currently very overloaded, and at certain points, transacting in Ethereum can take over 8 hours, in which really clogged. So if they don't fix that bottleneck, there is the potential for an alternative cryptocurrency like EOS to replace it as a foundation for that ecosystem. So regarding Litecoin, I don't know if any of you know this. Litecoin is the one of the top 5 largest crypto currencies by market cap. Their founder sold out of all of his Litecoin. So just you guys can Google this. So yeah, so just be aware that the founder of Litecoin has, in the last couple of months, has sold out of all of his Litecoin, which in my opinion is not a good indication for his faith in the currency going forward. So I'm not going to give direct investment advice to you. I will say this. I will say that the fact that Litecoin's founder has sold out of all of his coins is probably not a positive indication. And then on Ethereum, if Ethereum does not improve, if they do not make improvements to the network, there will be significant risk for alternatives like EOS to replace them. So it's very important to continue to look at Ethereum and see if they are making the necessary improvements just to stay competitive.
Okay, cool. Yeah. And another question.
Yeah,
One more question is the tax problem. So I know that Coinbase or GDEX, they had some agreement with the IRS, like one transaction more than 20,000 will be reported to IRS. So I heard there's a way to avoid this tax payment, tax payment, like to go to Hong Kong and bring all the digital assets into the physical wallet and get into cash there and come back.
So this is being recorded, so maybe we should talk about I don't know anything about it. You're right that the IRS is in close cooperation with Coinbase. So any transaction on Coinbase, not just the ones over 20,000, will be closely scrutinized.
Okay.
And if you are a U.S. citizen or a U.S. green card holder, you will be subject to those taxes. To give you a background, the U.S. considers cryptocurrencies to be a security and not a currency, which means they're subject to capital gains tax, which is different from other jurisdictions like Switzerland, which considers it as a currency, and that's one of the reasons that you've seen a lot of attention on cryptocurrencies in Switzerland. So we can talk a little bit later. I can't mention anything specific about how to avoid taxes. I officially don't know anything about that.
I also have 2 questions. So the first one is yesterday I read an article. I don't know if that's a heresy, so I just want to check with you. So I heard because for Ethereum, the biggest point is because it can support a smart contract. But it is that the miners will be able to they'll be able to do some kind of manipulation, like change the order of transaction on the chain they own. Is that something we need to worry about for the future of Bitcoin?
There's a lot of incremental improvements that are coming to Ethereum that I think will increasingly mitigate that risk. It is obviously still decentralized technology, so we do have a record of each and every transaction, each and every block. And so I think the room to be really fraudulent is somewhat limited. Because it can be detected, and people are using algorithms and AI to see, okay, are they being prioritized in a way that they shouldn't be prioritized, or are they manipulating the market by confirming certain transactions first? So I don't think that it is a significant long-term threat to the Ethereum network.
Thank you. And second one, what's the last one? So I was busy downloading your app and talking about your own business. So can you give me some more details on, like you mentioned, one of the big points about a successful ICO is it's often real promise, right? So what exactly does Bitcoin do in this area? Like what kind of advantages it has compared to the other competitors?
So the big issue, the big pain point that's being solved is there's a significant price difference between the different cryptocurrency exchanges. And in other words, if I buy Bitcoin on exchange A, it might be $5. If I go to B, it's suddenly $6. And so what we've done is we're working with multiple exchanges, and we make sure, regardless of which exchange you are using, we make sure that the execution happens at the best exchange. And then we redirect that transaction back to your wallet. So in this example, let's say you're on exchange A, your wallet, your Bitcoin wallet is with exchange A. You would then transact, you would send the Bitcoin through our platform, we would redirect it to the best execution, and then send it back to your wallet. So in other words, you're getting a better price on every single execution.
Have you considered it make this similar to something Robinhood is doing? Like you can tell the user what's the best seller, and you just take their money but don't buy the product they want to buy. You get profit from that, and you give the user no transaction fee. And
no, we're not. We want to be transparent. We want to help build out the ecosystem. One of the reasons that we're doing this is to build out the blockchain ecosystem. So all of the founders and also myself, we made a lot of money in cryptocurrencies. So we're not trying to just take advantage of people. We are trying to build out the ecosystem, and the way we're being transparent is that each and every transaction uses only Swift coin. So the amount that you will be charged for each and every transaction is immediately transparent with Swift coin. We give you the best execution price, and the amount that we charge is transparent by the Swift coin. So the Swift coin that I had you download just now, that's used as the transaction fee, and that's completely transparent for how much we will be charging. So we won't be saying, okay, here's 5 and 6, I'm going to give you 5.10, and I take the difference between 5 and 5.10. No, that's not. We're not trying to go that intransparent route. At least for now, the only way we make fees is through the Swift coin that you spend to process the transaction, and the amount of Swift coin required is always disclosed before you transact. Yeah.
Does this happen when users placing market orders or just with orders?
Market. Well, at the moment, we're only on version 2.0, so we're only doing market orders at the moment. We give you an estimated best execution, reserve the price, but we're not at the moment. Our current version doesn't offer limit orders. So in future versions, we're planning to introduce stop orders and limit orders. 你们也可以用中文问问题啊。要是有想用中文问问题的话，也可以。
So is Swift coin similar to 用中文吗？
都可以。
你那个 Swift coin 跟那 Cool coin 是类似的？
对，我们那个是同一个创始人。对，那个 GOO coin 对吧？
是
KU， 我们这个电子货币我没有听说过。
没有听说过啊。
用户量很大哦。用户量很大哦，那个。
用户这多少人？
应该是20万吧，反正他说注册。
那也不算特别多吧。
有多少？
我们之前的 app 我们用户团队100多万的用户。
哦。
Question: Do you have any APIs to get the history trading data?
Yes, so our Swift we have different service areas. Let me show you this to you. So one area is what I just mentioned, which is for the individual user, which would be for you guys. We also have APIs for businesses. So and also exchanges. So the businesses could directly interact with us and get our API to get their own best execution. So yes, we have APIs, but it's generally for 2B. Yeah, good questions.
你觉得那个 hosting 一个 master node 是不是比 mining 更加好？因为 mining 我是用很多电费，但是 hosting 一个 master node 好像没那么。
我觉得现在最划算的就是直接投资。
OK。
真的就是直接投资，因为我是2014年、2015年就自己去做那个就是运挖矿，然后一开始挺赚钱的，但是后来那个难度的那个增长速度比你的这个奖励涨得还快，所以现在就不划算了已经。所以我一开始也是就是通过挖矿去赚钱，但是现在我就做买卖，做直接投资，这是最划算的。
为什么你中文这么好？
这是另外一个话题了。
对于没有经验者来讲，你建议从什么地方开始学习，什么地方开始做这些投资？
我觉得可以一开始就不用直接用你自己的钱去投，就是你可以先了解一下这个比特币的走势，然后觉得哪个买入点比较好，你就试试，然后在你的笔记本里面就写下来这个买入价格，然后呢你可以继续就往后看，我是不是赚了钱，它的走势怎么样，我可不可以接受这个风险？因为有一些人他们就是说他们接受不了这个风险，也许你很有钱，但是你觉得我晚上睡不了觉呢，对吧？所以你这样的话，你就可以就是在没有后果的情况下了解怎么投资，而且有这方面的一个体验。那另外我觉得一开始其实最受欢迎的几个币就是比特币和以太币，我并不建议你先去投 ICO， 所以我觉得你一开始就去分析去研究就是这个比特币和以太币作为一个切入口。
你们是接受以太的那个吗？是接受了以太的那个，就是那个。
你说SWFT我们
对，
我们比特币以太币、比特币先进这些主流的都接受然后另外我们也有一些其他的货币。
OK。
现在有8个，就是除了这3个之外，有8个就是所谓的 altcoin 其他的货币，然后我们正在让更多的其他的电子货币上传。对。
你怎么建议分配就是你的比例在 Bitcoin、Ethereum 还有 altcoins？
我觉得其实我个人我先讲个人，然后就是说一个框架吧。我觉得总体来说 ICO 的这个风险比较高，就我刚刚提到的，就是不管这个 ICO 成不成功，如果所有的 ICO 都用以太币作为它们的基础，那它就会涨。所以相对来说以太币和这个比特币会稍微就是安全一点，而且未来几年很可能会有一个就是几个币就出来作为标准，那其他的币其实那就可能会跌到0，对吧？所以我个人是那个比特币、以太币以及这个比特币先进为主。
比特币先进。
比特币先进，没事，这是我的错。那个我是这样的，其实比特币先进，我是那个它300块的时候，我把我1半的比特币卖掉了，去买这个比特币先进。对，所以我现在我是不是不该说比例？反正我的比特币先进，我的比特币多一点，然后再往后就是以太币，然后有一些其他的货币，不会超过20%。所以只要
加起来不会超过20%。
不，那个其他的货币就是80%。
其他的澳币加起来都不会20%。
对，因为我是这样的，就是长期的投资，这是我个人的 就是处理方法。我就是长期的投资，我是比特币、以太币和比特币现金为主。然后呢，短期的这些投资会多看这些 ICO。但是我要是发现，哎，这个 ICO 确实不行，把它卖出去了，然后又买这个比特币现金。因为 ICO 其实你会发现很多会，比如说涨了5000%，或者10000%都有。所以你要是比如说我放那个所有电子货币里面的，就是放个5%，那它要是涨100%，那已经很好了，对吧？那我就把那个10000就卖出去，然后又去买这个比特币或者比特币现金。这是我个人的处理方法。所以这3个主流，是我长期的投资那个电子货币的长期投资组合。然后这些其他的币就是作为一种短期的投资策略。但如果他们猛的涨，我觉得他们就是长期来，就是我刚刚提到的回归，对吧？就是如果涨得很快，几个月后很可能也跌得很快。所以涨的这些很快的，我就再卖掉去买这个比特币，然后如果看到另外一个 ICO 也投一点点，对，然后重复。
你的长期、短期指的是多长时间？第二个，你是只做 ICO， 不做那些已经 list 到 exchange platform 的 altcoin 吗？
已经上市的也做，pre-ICO 也做过。所谓的长期，其实我觉得电子货币，我觉得它是未来3-4年，它其实是一个长期的趋势。确实过去1年涨得很快，就像1999年的时候，当时有无数的公司，然后但是亚马逊其实当时也没有表现得特别出色，对吧？其实它花了20年，它才做到今天的这个位置。那我觉得我个人的看法是，区块链是同样的概念，就是说我们相当于是在互联网时代的1998年，然后呢，也许会就是波动率会很高，会短期内，但是它是一个长期的一个趋势，所以20年后会有区块链领域里的2个岁再来看。所以长期还是挺长的，对。
用value来算，短期呢？
但是我会一直在重新看，比如说我刚刚说的那个 BTC 现金，我确实觉得，哎，那我就卖掉了一部分，所以也看情况，我不会说不管怎么样我就一直就是持有下去，也要看新的消息，对吧？然后根据这个新的消息就靠自己的判断能力去调整。
English or
English, go ahead. It's up to you. Whatever.
Right. So excuse me. When you're investing stock, for example, you can refer to their fiscal quarter report. But for this cryptocurrencies like Bitcoin or Ethereum, there's nothing I find really reliable. So what's the sign? Like for short-term investments, what's the sign you see that a kind of coin will go up or down?
So, firstly, you're absolutely right. There are many ICOs that haven't even written code yet. So in theory, they could not even be capable of executing on their problems. So the first is to assess, can this team answer the problem that they're trying to solve? And one of the ways I recommend doing that is if you don't know the founders, the best is if you know the founders. If you don't know the founders, you should look at their GitHub account. Even if you don't program, look at their GitHub account. I'm a terrible programmer. But I will look and I see, do they have a history? Because what a lot of people are doing right now is copying and pasting white papers. So do the founders have a history? Look at the team, and assess the team, the advisors, what are they capable and positioned to solve the problem? You can also look at what partnerships do they have? Do they already have users in place? Even in the venture capital world, when a project is at such an early stage, generally speaking, most of them die. So even when you hear about Sequoia, probably the most famous VC ever, most of their investments fail. In fact, only, I would say, less than 1 out of 10 make that big success. And so with ICOs, it's the same thing. So really, it's going, most of them will fail. You, at such a beginning stage, all you have to go by, mostly, is the team. And whether the problem they're solving is significant enough. But as I said before, one other key component is the market big enough? For example, you have, if you can only have 1 out of 10 of your investments succeed, you want to make sure that one is big. And if the problem they're trying to answer is hard, and the market they're addressing is small, that means that even if it's successful, that one will not be enough. So also assess the market size and their potential to capture that market.
So thank you, but forget about those ICOs, because I'm also a starter, so probably I will just narrow down the options, between Bitcoin and Ethereum or some other mainstream coins. So is there any, for example,
by the way, I have to get going in 4 minutes.
Oh, sorry.
So yeah.
Okay, so just
feel free to add me on WeChat though. You can scan this.
Are you in the WeChat group?
Yeah, I'm in WeChat. Yeah.
Okay, so just for the mainstream coins, is there any sign, like for example, as you mentioned, it's good to know that the exit is more important than the entry.
As important, yeah.
Yeah, as important. Definitely. So is there any sign tell you that I need to get out of this? What exactly is
So I would say that there's fundamental factors and technical factors to look at. Some of the technical factors I mentioned when I said mean reversion. Do you remember when I said mean reversion? If it goes up really fast, it can come down really fast. And it does tend to stick to a long-term average. So that's on the technical end. On the fundamental end, you do need to constantly reassess, is my investment thesis intact? For example, if you think Litecoin is going to do very well, and their founder, the person who knows the coin the best, sells everything, then your investment thesis might have changed. So you always need to take into consideration if something has changed or altered your investment thesis. If you're looking at Ethereum and saying it will be the foundation for all ICOs, and even 6 months from now they take 12 hours to process even a single transaction, you need to reassess. So there's the technical and then the fundamental part. And with the fundamental part, you need to constantly reassess with new information whether your original investment thesis is valid. Wait, I'm sorry. You asked. Let me take one from somebody who has it. Yeah.
我想问一下呢，就是你们在这个可以在currency 之间做 transaction，这个速度是 depends on 不同的 currency， 还是你们自己有一个速度？
就是我们其实是有2种处理方法。一种处理方法其实是我们有一个池，是我们就是会到有一个上限，但是我们内部有足够的这个流动性。可以完成这些交易，但是呢，也要看电子货币，因为电子货币它的本质就是需要这些挖矿工人去证明每一个交易。那如果所以你仍然需要根据这个电子货币的那个证明流程。
那就是说。总体的 transaction 时间要那种比如说 Bitcoin 的本身的成交时间加上你的内部的。
但我们内部的挺快的，总体来说会挺快的，而且你那个 Bitcoin 那个比特币也要看你愿意花多少钱，就是那个工费。如果工费提高，他们会优先考虑你的交易，而且因为我们那个交易之间的差价其实是挺大的。如果你比如说可以通过我们就是这个咱们说2%，那你可能比较愿意多花个0.1%去加速，然后你的这个交易更快的完成。 所以这个有不同的因素存在，但是确实你仍然需要依靠这个电子货币本身的这个 protocol。
你们是基于 Ethereum 的blockchain吗？
我们是对。
How do you see the recent correction in the market? Because last few days we all lost a lot. We want to share an example.
Me too.
Share example.
So I think firstly I think the volatility is normal.
Yeah.
I think the volatility will eventually decrease. But I think this blockchain is a 20-year trend, or at least a 10-year trend. And in the short term, you will have significant volatility. If you look at 1990, it's always good to look at history, because history tends to repeat itself. And if you looked at 1999, you saw massive valuations. You saw cases where if you added .com to your name, your valuation went up by 50%. I expect significant volatility, downside and upside. In the short term, I think it's normal to see this volatility. I think if anyone told you they can predict exactly what the price of Bitcoin would be tomorrow, they're lying to you. So I cannot personally predict short-term price movements, but I do think that if it dips a lot, again, there's mean reversion. It might be an interesting buying opportunity because the market always overreacts. The key investment tenet is that the investment, you want to analyze the intrinsic value of the investment, and then see how the price fluctuation moves around that intrinsic value. And if it moves significantly below, it might be a buying opportunity. If it moves significantly above, it could be a selling opportunity. And that's how you manage your risk and assess the short-term investability of the asset. One last question. Okay, I'm gonna go with you.
Bitcoin was $11,000 now. Wow.
So as I was saying, I can't predict short-term volatility. I think over the long term, the cryptocurrency market as a whole will continue to increase. So if you look, if you look at Bitcoin individually, it's possible that it will not be the largest cryptocurrency forever. It's possible. In fact, if you look 2 years ago, Bitcoin was over 60% of all market cap of cryptocurrencies. Now it's around 35%. So Bitcoin divided by the total market cap of all these currencies is decreasing as attractive alternatives become available. As for its short-term fluctuation, I don't have an answer, and I'm unable to predict the short-term volatility. Okay, great. Thank you so much. I'm going to leave some